There are two main stock exchanges in China, the Shanghai Stock Exchange and the Shenzhen Stock Exchange. The Shanghai Stock Exchange, SSE, is a Chinese stock exchange located in Shanghai. The Shanghai Stock Exchange, with a market value of $4 trillion as of November 2018, is the world's fourth biggest stock exchange by market capitalisation. The Shanghai Stock Exchange, unlike the Hong Kong Stock Exchange, is still not completely accessible to international investors and is frequently influenced by central government decisions due to capital account limitations imposed by Chinese mainland authorities. There are 1,860 listings on the exchange and they are denominated in Chinese yuans. As a competitor to the NASDAQ, the Shanghai Stock Exchange created the STAR market in 2019, which features exclusively technology-related firms. On the Shanghai Stock Exchange there are two categories of stocks, A shares and B shares. The local renminbi yuan currency is used to price A shares, whereas the US dollar is used to price B shares. Trading in A shares was initially confined to local investors exclusively, but trading in B shares was open to both domestic and foreign investors. Foreign investors are now authorised, with restrictions, to trade in A shares through the Qualified Foreign Institutional Investor (QFII) program, which was officially started in 2003 after changes were completed in December 2002. A total of 98 foreign institutional investors have been granted permission to acquire and sell A shares at this time. The most widely utilised indicator to represent SSE's market performance is the SSE Composite, also known as Shanghai Composite Index. All Shanghai Stock Exchange listed stocks, A shares and B shares, are included in the SSE Composite Index. The Shenzhen Stock Exchange, SZSE, is a stock exchange located in Shenzhen, China. It is the 9th biggest stock exchange in the world and the 4th largest in East Asia and Asia, with a market value of about $2.504 trillion in 2019. There are 2,375 listings on the exchange and they are also denominated in Chinese yuan. Because of the restrictions on foreigners to buy shares directly on these exchanges, most foreigners will buy American depository receipts of Chinese shares listed on US exchanges instead of buying on the Chinese exchange directly. Also, Chinese companies are listed in other overseas markets such as Hong Kong and Singapore, but the access and choice is then limited. The People's Republic of China's economy is a growing market-oriented economy with economic planning included through industrial policies and strategic 5-year plans. The economy, which is dominated by state-owned companies, SOEs, and mixed ownership firms, also has a substantial domestic private sector and is open to international corporations, making it a socialist market economy. State-owned firms accounted for approximately 60% of China's market capitalisation in 2019 and would produce 40% of China's GDP of $15.66 trillion in 2020, with the remaining 60% made up of local and international private businesses and investment. The total assets of all Chinese SOEs, including those in the banking sector, hit $78.08 trillion by the end of 2019. 91 of these SOEs are Fortune Global 500 businesses in 2020. China has the world's second biggest economy by nominal GDP and the world's largest economy by purchasing power parity (PPP) since 2014, which some believe is a more accurate assessment of an economy's real size. Since 2010 it has been the second biggest by nominal GDP, relying on market exchange rates that fluctuate. According to government projections, China will overtake the United States as the world's largest economy in nominal GDP by 2028. For much of the 2 millennia from the 1st to the 19th centuries, China was one of the world's most powerful economic powers. Under Deng Xiaoping's leadership, the government launched economic reforms in 1978. As a result, China has the world's fastest growing major economy, with average annual growth rates over 10% during the last 30 years. China boasts 4 of the top 10 most competitive financial hubs in the world, more than any other country: Shanghai, Hong Kong, Beijing and Shenzhen. By market capitalisation and transaction volume, China boasts 3 of the top 10 stock exchanges in the world: Shanghai, Hong Kong and Shenzhen. Foreign investors had purchased a total of $440 billion in Chinese equities as of the end of June 2020, accounting for roughly 2.9% of the total value and indicating that foreign investors had purchased a total of $156.6 billion in the stocks alone in the first half of 2020. As of the beginning of September 2020, the entire value of China's bond market has surpassed $15.4 trillion, placing it ahead of Japan and the United Kingdom, and second only to the US with $40 trillion. Despite a 44.66% year-on-year growth, foreign ownership of Chinese bonds reached $388 billion at the end of September 2020, accounting for 2.5% of the entire value. China's public sector employed 63% of the country's workforce in 2019. According to the IMF, China's GDP nominal and GDP PPP per capita income ranked 59th and 73rd respectively in 2020. In 2020, China's gross domestic product, GDP, was $15.66 trillion, 101.6 trillion yuan. The country's natural resources are valued at $23 trillion, with coal and rare earth metals accounting for 90% of the total. China's overall banking sector assets are about $45.838 trillion, 309.41 trillion CNY, with total deposits and other liabilities totaling $42.063 trillion. Direct foreign investment in China, which reached over $1.6 trillion as of the end of October 2016, provided roughly 1/3 of China's GDP and 1/4 of its jobs directly and indirectly. China's FDI stock reached $2.947 trillion at the end of June 2020, while China's departing FDI stock was $2.128 trillion. China's total foreign financial assets and liabilities totaled $7.860 trillion and $5.716 trillion respectively, making it the world's second largest creditor nation behind Japan. As of 2020, China is the world's greatest receiver of foreign direct investment, with $163 billion inflows. It has the second largest outward foreign direct investment, with $139.91 billion in 2019, after only Japan with $226.65 billion. China ranked first in the world in total number of billionaires and second in total number of millionaires in 2018, with 658 billionaires and 3.5 million millionaires. According to Credit Suisse Group's 2019 Global Wealth Report, China has surpassed the United States in terms of wealth among the top 10% of the world's population. China is home to the Fortune Global 500's top firms, with 129 of them located in the country as of 2020. China also has the world's greatest number of privately held technology firms, tech unicorns, with each having a valuation of over $1 billion. China boasts the world's highest foreign exchange reserves, valued at $3.1 trillion, but when foreign assets held by China's state-owned commercial banks are included in, the reserve value increases to over $4 trillion. China is the greatest manufacturer and exporter of products in the world. It is also the world's fastest growing consumer market and the world's second largest goods importer. In terms of services, China is a net importer. It is the world's largest commercial nation and a major player in international commerce. In 2001, China joined the World Trade Organization, WTO. ASEAN, Australia, New Zealand, Pakistan, South Korea and Switzerland are among the countries with whom it has free trade agreements. The United States, the European Union, Japan, Hong Kong, South Korea, India, Taiwan, Australia, Vietnam, Malaysia and Brazil are China's most important commercial partners. As of 2020, China's labour force will be the world's biggest, with 778 million workers. On the Ease of Doing Business Index, it is ranked 31st, while on the Global Competitiveness Report it is ranked 28th. China is the only middle-income economy, the only recently industrialized economy, and the only rising country among the top 30 countries on the Global Innovation Index. China leads the world in patents, utility models, trademarks, industrial designs, and creative products exports, and it also boasts two of the world's top 5 science and technology clusters, Shenzhen, Hong Kong, Guangzhou and Beijing, respectively, in 2nd and 4th place. China's 5G subscribers have already reached 300 million by the end of April 2021. The gains generated by non-resident enterprise owners through the transfer of equity interest in China resident firms are subject to a 10% income tax under Chinese law and regulations. For equity research on the Chinese market, the National Bureau of Statistics of China is a great resource. First, with more than 100 regions covered, you can learn more with the Exotic Markets book available on Amazon. Second, you can explore sector and industry intelligence for different countries by going to pervasives.com. If you have an issue in relation to accounting and tax with foreign stocks, you can contact us by going to our website.